Hi everyone, let's have a look at my bullish and bearish medium time frame Elliott Wave scenarios on Bitcoin, starting by just looking at this range over here with a volume profile pulled from the beginning to where we are right now. And during my last update, Bitcoin was ranging just above the point of control, where I mentioned if price is going to move below the point of control, it is a bearish sign. And oh boy, did it move down quickly, right? So now price took the liquidity of the lows of the range, so it kind of makes a lot of sense to then move to the highs of the range. Now, of course, price can be ranging here at the lows for a while before then moving up, which is preferred in my opinion, because we still have a lot of liquidity at around 30K. So let's then go to my first scenario that I like to show you, which changed a little bit. So this now can still be a zigzag in a wave A, B, C. However, the blue count now has to be a 3, 3, and then another 3-wave move. And the reason is because price now took the low. So if this was going to be a zigzag in a 5, 3, 5-wave move, then this wave B is not allowed to take the lows of a wave A, and then this being an A, B, C. Because price took the lows, and if price is now going to move to the upside in the bearish medium time frame scenario for eventually more downside, this needs to be a 3-wave structure. Now this by itself can then be a zigzag, like a 3-wave structure over here, followed then by a 3-wave move to the downside in an X, and then another 3-wave move to the upside in a wave Y. That is possible. However, the green count is also under a little bit of pressure, because it can also be that this is a 3-wave structure in a W, followed then by a 3-wave structure in an X, and then a 3-wave structure in a Y, which means that this wave A now moves to the left. And because wave A moves to the left, you can get a 3, then a bigger 3, and then a 5-wave move, which is an ABC expanding flat. Or you can get a regular flat, which is an ABC, where the high of wave B is a little less high. But that is why this target box of B is so big, because you have to take into account the expanded flat target, which is the 2022 range highs as well, just in case this is a 3-wave move to the downside. So that is very important. It can also then be a WXY, with this then being a W, then you have a 3-wave in a wave X, before then eventually a wave Y to the downside, which is also a 3-wave structure. So it's very, very interesting what has happened on Bitcoin, and it's all about how are we now going to move to the upside, or do we continue to the downside? And I have scenarios for both to show you, right? So in this particular scenario, we are now expecting then a move to the upside, where we still have the triple top liquidity. We still have the target box between 30.2K and 30.4K for a little bit of resistance. And it is a very, very interesting area of confluence, where the 1-to-1 is actually an old target, so I can remove that. So we definitely have a little bit of liquidity over here, an interesting target box for some resistance, for then potentially a move to the downside again, in this either being a 5-3-5 wave move, or it's going to be a 3-3-3 or 3-3-5, where the last C over here is a 5-wave impulsive structure, or, and don't be confused now, a 3-3-3, right? Okay, many possibilities. I will keep you up to date as good as I can, of course, but in all these scenarios we expect a move to the upside of this range to take the liquidity of the highs before then moving to the downside. If we then look at the triangle, yeah, what makes most people lose? Well, actually a little addition to what makes most people lose. First, stopping out all the longs, moving price to the upside to stop out all the shorts, and then moving it down again. That's what makes most people lose, of course. So yeah, we were looking at this triangle over here, where beginning traders usually learn about trend lines and they learn about patterns. And if you pull some trend lines, you will see a triangle. So we were talking about stopping out people from the triangle first before moving to the downside, which means that the breakout shorters that shorted over here, stop loss probably in the triangle, looking for a lot or more downside. And you have the people shorting in this range that put their stop losses above these highs over here. So we were looking for a continuation, or at least a move to the upside, either taking this lows and then move to the upside, or just moving up instantly. Well, now it took the lows, that's absolutely fine, but preferably answering the question, what makes most people lose? I would like to see a move to the upside, where the breakout shorters of the triangle are going to be punished, and you have the stops over here above the highs. That is a very attractive liquidity area at 30K. So I would prefer, again, a move to the upside before then potentially going down or continuing up. I don't care, but at least taking the liquidity at about 30K. Now, if you then move to the bullish scenario that I have, the low is in. So in this particular scenario, this is a 3-wave structure in a wave W, followed then by a 3-wave structure in a wave X, and then a WXY, and then we have an ABC to finish wave Y. The target area for a wave C most commonly is between the 1 and the 1.236, which as you can see has been nicely respected. Of course we wigged below, but that is no problem at all. It has been nicely respected. And also the 0.618 is a target of wave Y, which is pulled from the high of W to the low of W to then the high of X, which as you can see is quite nicely respected as well. Now, eventually I actually would prefer a move up and then a move down, but this could be the low for then a continuation to the upside. There is, however, a little thing that I do like to say, and that is that wave X didn't take the high. So if this is a three-wave structure over here, usually I like to see the first high being taken by the second one. So if this is then a 1, 2, like or an ABC, of course, I want to say 1, 2, 3 waves, but an ABC or a WXY, usually wave C or wave Y takes the high of the first structure, and that has not happened. And because this high is not taken, it feels very, let's say, weird to me to make this the end of a certain structure, meaning the end of a wave X. So this feels this feels like an unfinished corrective structure because we didn't take the high over here. Of course it is possible this is potentially the high of wave X and then a WX dump over here and then a wave Y. That's absolutely fine. But I just wanted to at least say X didn't take the high, so that is something to at least take into account. And then in this move to the downside, we have an ABC, the 886 retracement target of the high from X to the low of wave A with the fib is a common target for a wave B retracement, not for a wave 2. So I prefer this being an ABC over a 1, 2 and then continuation down in a wave 3 because of the 886 being a rare target for a wave 2, but a common target for a wave B. And we hit it before then moving to the downside very nicely indeed to take the lows. And then if we go to the most bearish scenario, which is a impulsive structure to the downside, we're looking at this to be a wave 1, 2 and then continuation to the downside. There's two very big reasons this is definitely not a preferred scenario, and that is, first of all, that this move to the upside looks very corrective in a WXYXZ structure, a WXYXZ on the lower time frames. And if that is the case, you cannot move or you cannot end any structure with a WXYXZ. A WXYXZ Elliott wave structure can only exist in a wave X or in a wave B, which means it has to be the middle of something and not the end of something. So if this is a B or an X, it either is an A, B, C, or it is a WXY. It's either or. It can't be the middle or it can't be the end of something. And in this structure, with wave 2 ending over here, this is the end of something, which doesn't really make sense, right? So in this then being a 1, 2, 3, this is a bit odd. And if it is a 1, 2, 1, 2, the reason I put the 2 over here and not over here, which some people might do, is if there's a 1, 2, 1, 2, what I like to see is a diagonal in a 1, 2, 1, 2, like a wave 1, 2, 1, 2, and then continuation to the downside, where the second one is taking the low of the first one. However, if we put wave 2 over here, and this is a wave 1 for then a 2 and a bigger 3 to the downside, this wave 1 did not take the low of this wave 1 over here. So basically something that I'm always looking for in a diagonal structure, being a 1, 2, 1, 2, and then maybe another 1, 2, and then eventually lift off, you get like this diagonal form, and that is something I like to see in a 1, 2, 1, 2, 1, 2. But clearly, if the high of 2 is over here and this is then the low of a second wave 1, it did not take the low of the first wave 1. So that also doesn't make sense to me. So that is why the most bearish scenario over here with an impulsive structure to the downside makes the least amount of sense to me. And I'm looking for a basically move to the upside after the fact we took the lows of the range, and either the correction is then in and we continue to the upside, which has to do with the macro and the high time frame counts, which you can check out the video in a second, or we go up before then going down once more and reach the lower target boxes that we have over here, because in this range we now took the liquidity at the low. So how nice would it be if we take the liquidity at the highs? I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested, and for now, thanks for watching and subscribing. I will see you at the next one. Bye bye.